50 minutes away from the much-anticipated U.S. jobs report. And we just heard from Lydia Thew at the NYSE. So let's get some more insight into the market's thinking heading into the report. And David Rovelli, the managing director of equity trading at Canaccord Adams, and he joins us here in the studio. And David, always great to talk with you. And you always seem to have a great sense of how the market's going to trade and what's going to happen. So in this jobs data, whatever we get, what are you looking for in the market reaction?
Well, from the ADP number yesterday, I'm looking for pretty much a little off to the worst side of things. Looking probably for 0.6, 0.7. I think they're looking for 9.6, right? So I'm looking for about 9.7. Yeah. And then with the continuing claims, they're looking for 365. I'd say between 350 and 400. Just because the ADP number was worse, and I never used to follow the ADP number, but believe it or not, the last 3 or 4 times it came out, it was spot on.
Why do you think that is? I mean, because I've always heard traders say, forget the ADP report. I mean, that doesn't mean anything.
I don't know if they fine-tuned it or tweaked it, but the thing about the ADP number is it just follows the public sector. It doesn't follow the private sector, so it doesn't give you the perfect correlation. But I never used to follow because it used to be so off. But like the last 3 months, it's been really, really accurate of what we're going to see. So we should see a little worse of a number. Right,
and so that may be why you're seeing equity futures trade lower right now.
Yes.
I mean, either way, though, David, do you want to see any surprise either in the upside or the downside by a big margin? Because doesn't that just mean more volatility in the market?
Well, more volatility is good for traders like me, but I think as a country, we want the number to be better. We want people to get back to work. We want the economy to take off. But unfortunately, you're not going to see this. I don't care what any economist says. Maybe we're bottoming, but we're bottoming at a horrible area. And I don't think there's any way for us to return to like a strong rebound in the job market for a very long time.
So where does that leave the market going forward then? What are you, a bull or a bear in the short term?
Short term, I'm a bull. Long term, I just got to see Bernanke's plan to get out of this mess because, we're creating a ton of debt. We're buying a ton of mortgage-backed securities. And that's a whole different story if you want to get into that. But short term, it's a holiday week. It's the beginning of the month. A lot of new money put to work. I think you're going to see a move up. I think eventually in the next 2 to 3 weeks before earnings season, you're going to see 1,000 on the S&P.
Right, but we just finished, I think, the best quarter in 11 years in the markets. I mean, you think we're going to repeat that in the third quarter or what?
No, definitely not repeat it. I think we'll probably be up maybe 5 or 6% in the beginning of the quarter, and I think it's going to become a stock picker's market. And last quarter was very interesting. No matter what you bought, small cap, large cap, commodity, it went up. Basically, on average,
it was the herd mentality, right?
Yeah, this quarter, the junk's going to go down. The good companies will probably go up a little or maybe stay steady or down a little.
Why is that? Why is the differentiation this time?
Because we're way ahead of where we're supposed to be. I mean, if you put a 15 PE on a market in a recession, that's about 900. We're at 930 right now. Mm-hmm. We're looking at $60 earnings. That equals 900. We're at 930. Everyone's anticipating this great rebound. You're not going to have a great rebound with the housing market depressed as much as it is and the economics of the job market going in the wrong direction.
Okay, so David, very quickly then, where do you want to be in this market in anticipation of that then?
Well, we discussed this yesterday, me and you. I would like to be in large cap growth stocks, and I would like to with a nice dividend. And I'd like to also our global conglomerates.
Right.
And I'd also like to be in some tech stocks, but not at this level. A lot of people don't realize that the semiconductors, which I really love tech.
Yeah.
I love innovation. A lot of people don't realize that the semiconductors in November, the stocks was trading at 167. It went to 282. That's a 70% return and the worst environment in history since the Great Depression. Why would you just jump in now? I'm waiting for a pullback in the stocks about the 240 level. That's a 200-day moving average. Then I start looking at them again.
Okay, David, good to talk with you. Have a great holiday weekend, by the way.
You too, Beth.
David Rovelli at Canaccord Adams will be back talking more about the jobs data. Keep it here.